It seems like nothing matters in crypto. It doesn't really matter what kind of asset we buy here. They all go up at the same time and they all go down at the same time. This is what seems to be happening just on the surface of it. The macro seems to be much more important than the micro. Asset selection is not as important as figuring out if currently crypto is very expensive or very cheap. But there is an interesting structure in this market. It seems like as the bull run continues, the longer it lasts, the more people get risk on. The more people swap from Bitcoin to Ethereum to risky altcoins. There's actually a structure that helps us time the market. Now, you've very likely seen this chart before. This is Bitcoin long term. So it's a US dollar chart. And yes, we've got our bear markets. This was a drop of more than 80% in 2018. Then we had our nice bull run from 3.5K all the way to 60K. And then again, another massive correction from almost 70K to 16K. And so yes, the altcoins of course also tend to trend down when Bitcoin is crashing. But there is a capital shift happening within crypto over time. And there are some very nice metrics to illustrate that capital shift. So let's start with the very first metric. What we've got over here at the bottom, that's the Bitcoin dominance. Now let's change the upper part of the chart from a linear scale in the Bitcoin price to a logarithmic one. Then we can see a bit more how the percentage changes move over time. Now it appears as if those charts aren't really that much correlated. As in, yes, recently the Bitcoin price went up and the Bitcoin dominance went up, but there were also times when the price went up as well, while the Bitcoin dominance went down, while it crashed. Just a quick recap in case you don't know what the Bitcoin dominance is. Bitcoin dominance measures how much of the entire cryptocurrency market cap is currently Bitcoin, or how important is Bitcoin within the crypto space. So when Bitcoin dominance is rising, it means that Bitcoin outperforms most altcoins. When it's crashing like this, right, when it goes from 70% all the way down to 40% in a matter of a few weeks, that means that the altcoins do much, much better. Now what's interesting here, right? The Bitcoin price went up, Bitcoin dominance crashed, so that means the altcoins went up much more. Now we can have a look at a very similar metric over here. This is now the Ethereum dominance. How much of all of crypto is in Ethereum? Now let's have a look again at this bear market, right? The one in 2018, where Bitcoin went down by more than 80% from 20K to 3.5K. During that time, the Bitcoin dominance tended to go up. So the altcoins lost more during the bear market than Bitcoin did, which intuitively makes sense, right? The altcoins are more risky. So when everything is crashing, then people just sell everything in the alts, and the altcoins are also less liquid. So they're more reactive to the general macro. So if things go down, the altcoins in theory should, as per tendency, go down more. So Bitcoin dominance should go up during a bear market. So it makes sense, at least comparatively speaking, in a bear market to rather hold Bitcoin than the altcoins. With the altcoins, you get really crushed. But let's now look at the recovery. So starting from the bottom at the end of 2018, Bitcoin moved from 3.5K up to more than 12K. Bitcoin dominance during that rise still continued to go up. Isn't that fascinating? This is telling the exact opposite story, right? When now the market is recovering, why aren't the altcoins recovering more? Why doesn't it make sense to buy the altcoins at the bottom to then get the beginning of the turnaround? I think the reasoning is the way those bottoms are formed in the market is through long-term investors. So whenever a market heats up, right, and the market goes up very quickly, a lot of new investors get into the space because everybody talks about it. Bitcoin is at new all-time highs, etc. A lot of tourists enter the space. Once we go down and once we have fallen by 60, 70, 80%, who is still buying at that point? It's the long-term investor, right? It's not that much more short-term money because the short-term money has already lost everything. And the long-term investor tends to rather buy Bitcoin. Bitcoin is the safer bet long-term. We never know what kind of altcoin is going to rally in the next bull run. It might be a completely new set of altcoins that haven't been yet invented. But Bitcoin is likely going to stay around. So when we are buying for the long term and we are not yet sure if the bear market continues, it makes sense to just buy regularly into BTC. This is probably how those bear market bottoms are formed. And that explains why Bitcoin dominance continued to go up while the Bitcoin price made an almost 4x. Now what happened afterwards, Bitcoin dominance rose a bit further until it hit roughly 70%. 70% of all of crypto was in Bitcoin. And at the same time, the Ethereum dominance was extremely low. We have already clearly left the bear market behind us because we already went from 3.5K to more than 12K, but we are not yet at the all-time high. The all-time high prior was at 20K. So it seems like the market is now back in recovery mode. It seems like it makes sense to take on more risk. And that's then when the first money moves from Bitcoin to Ethereum. So it's the first step of getting more risk on. Now, why are we even talking about what happened in the past here? I think it's important because likely things like this will repeat again. I think the psychological ways how people invest tend to stay consistent over time. And so we can, if we just look at what happened in the last few years, draw some comparisons to what's happening today. And so here we are again, Bitcoin dominance is at 70%. The Bitcoin price has already recovered by 3x from its bear market bottom, and the Ethereum dominance is very low. And this is when people started to buy Ethereum over Bitcoin. So the Ethereum dominance went up by almost 200%. The Bitcoin dominance just stayed flat. It first went down a little bit, then recovered again. And so at the beginning, when we're just coming out of a bear market, it makes sense to buy Bitcoin. As we have recovered, it makes sense to swap this over to Ethereum. But then what about the altcoins? Again, what I think is happening is that people get more and more risk on. So let's say Bitcoin moves from 3.5K and it does more than 10x, then probably it's unlikely they will do another 10x in the short term. So people are looking for the next Bitcoin. The next Bitcoin is Ethereum. And once Ethereum has rallied, once that has outperformed by 100, 200%, that's then when people really start gambling on the altcoins. That's then when people have made a lot of money and when they want to get even more exposure. And so let's shrink the Bitcoin dominance chart and let's have a look at what happened with the altcoins. So that's here in red. So this is now the others dominance. This is how much of all of crypto is in the altcoins that are not in the top 10. We've seen the bottom in the Ethereum dominance happening after we started recovering from the bear market. Once Ethereum started outperforming and Bitcoin already hit 40K. So it now did more than a 10x from its bottom. That's when the others dominance was extremely low, historically speaking, and that's when people got really risk on. So this is where the altcoins shine. This is when the altcoins did a 200% outperformance. And again, at the same time, the Bitcoin dominance crashed into oblivion. So we don't want to be in Bitcoin at the end of a bull run. We want to cycle more and more risk on. The best strategy is probably to sell part of the Bitcoin because we've already made all of those gains and then just lock those Bitcoin gains away, right? Put this maybe in the stock market or in gold or whatever, fixed deposits, and then take a part of the gains and use that for more risk on assets. So at the beginning, Ethereum, then afterwards the altcoins. So we lock in profit and then the remainder we use for the next potential wave. And so this brings us, of course, to today. Where are we now? The Bitcoin dominance is not yet at 70%. So they're not as heated compared to, say, summer of 2019. We have seen again our bear market, right? We crashed from 70K all the way down to 15, 16K. So again, almost 80%. And as we're coming out of the bear market, the Bitcoin dominance is rising. The exact same behavior that we observed in 2019. The price is recovering and Bitcoin dominance is going up. It appears as if we are starting with the first risk on cycle. Now this is the Ethereum dominance and it has bottomed exactly at the same level to September of 2019. And we actually anticipated this bounce. Feel free to check out older videos on this channel. I've talked about Ethereum likely underperforming in 2014 and I've also talked about this bottom. And we capitalized on that first bounce already quite massively. We made some money here. Now, if we think that history is going to repeat itself to a degree, should we already move from Ethereum to the altcoins? I think it's a bit premature. And that's because of two reasons. The first reason is that Ethereum dominance historically tended to go much higher, right? It made its almost 200% gain. But the second reason is have a look at how much apart those bottoms were. So at the bottom is again the altcoin dominance and over here is the Ethereum dominance. The move from here to here is roughly 15 18 months. And we have seen in the bottom just 1 month ago. So we might see another entire year of Ethereum outperforming the rest of the market. Ethereum is still, comparatively speaking, extremely cheap given its adoption in decentralized finance and given its adoption in stablecoins. There is a real case to be made that Wall Street might adopt Ethereum to a degree, that Wall Street might use Ethereum to issue real-world assets, that maybe BlackRock is going to issue an S&P 500 ETF on the blockchain. What blockchain are they going to use? Probably not Solana, probably not Tron. They're likely going to go with the safest of the blockchains, which is perceived to be Ethereum. And that would of course fuel a massive rally in Ethereum. It would help Ethereum outperform Bitcoin by quite a bit. So we're likely going to see, at least that's my base case right now, we're likely going to see Bitcoin's dominance rise a bit more to 70%. At the same time, Ethereum's dominance rise a bit more. Thus, the altcoins are likely going to still have, comparatively speaking at least, a hard time. Now, I'm not saying that the altcoins can't go up in US dollars, right? There is a lot of correlation within crypto. But I do expect that a mix of Bitcoin and Ethereum is likely going to do better than a random basket of altcoins in the next months. And again, that's based on this data, right? Historically, it took much longer for this rotation to happen. We still have a lot of upside for Ethereum. And then once the market is heated enough, and once Bitcoin is maybe at 130, 140K, when all of the stablecoins had been deployed, we talked about the stablecoin dominance in prior videos, then we might see Ethereum doing another leg up. And once Ethereum is heated enough, once it has doubled maybe versus the rest of the crypto space, then we are likely going to see another massive altcoin season. Right now, even though it looks like this, it's not yet altcoin season. Again, in aggregate, the altcoins are not doing that well. Just have a look at the last year. We've got our few winners, but in the grand scheme of things, if you just have a diversified portfolio of altcoins, you own 10 or 20 altcoins, you probably did not do as well compared to just buying Bitcoin. Bitcoin did outperform the vast majority of crypto in the last year. Now let's zoom out a little bit and have a look at the macro picture. We actually see an expanding crypto market, money flowing into the market since October of 2023 already. We know this because of this data over here, the stablecoin market cap. It's currently going up. Before October of 2023, it tended to go down. And the way this data is generated by looking at the minting and the redemption of stablecoins. So fundamentally how this works is when you deposit your hard-earned fiat currency to a centralized exchange, then that centralized exchange will send over the fiat currency to a custodian, to a stablecoin issuer. That custodian, so be it USDC, so Circle, or Tether for USDT, that custodian will hold the funds in a dedicated account and then will create tokens. So that's what's happening when this chart is going up. Whenever you're withdrawing your funds, then of course the custodian has to release again the fiat, send it over to you via the centralized exchange, and that's when we go down. And there's a reasonable case to be made that the more money is in a system, the higher the prices should go. Have a look at this. This is Bitcoin since October of 2023. And the largest drawdown we have seen while money was still flowing into the market was 28%. But again, when money is flowing in, those dips tend to get bought up. Now, what are those green circles over here? They appear after a price rally. It's an indication when there's a lot of attention on crypto. So there was a spike in search interest for Bitcoin at the beginning of March of 2024, but also at the beginning, middle of November of 2024. So that's what's highlighted with those bubbles. The masses tend to be late. The masses tend to buy after a price rally. And that's the problem, right? Most people enter crypto when prices are high, and then potentially comes at least a short-term correction. And then a lot of those people that got excited about Bitcoin first have to ride through that correction. It can be minor, since currently the market still expands, but it can also be major, of course, as we have seen with prior attention spikes. And so there are two fundamental forces that move the crypto prices. First of all, it's the money in and outflows, but it's also the swapping activity. So once there's capital in the system, people tend to swap in and out of Bitcoin, but also in and out of the altcoins. And whenever we deploy, say, $100 worth of stable coins, the market cap of a crypto asset rises more than that. There is some inherent leverage effect. And that means we can measure how much the market is currently risk on or risk off. What we've got over here is the stablecoin dominance. So it's not the stablecoin market cap, it's the stablecoin dominance. It measures how much of the entire cryptocurrency market cap is currently in stablecoins. When this is very high, the market is risk off. So a lot of the market cap is in stablecoins. When this is very low, the market is very risk on. And in the last 1.5 years, we tended to trade in a range between 5% stablecoin dominance and 9% stablecoin dominance. And surprise, surprise, when the stablecoin dominance is high, it means crypto prices are very low. When the stablecoin dominance is low, crypto prices tend to be high. So interestingly enough, whenever the stablecoin dominance is low and when prices have already gone up, that's when the tourists enter and first get burned. So we want to be counter-cyclical. We want to sell when stablecoin dominance is low. We want to buy when stablecoin dominance is high. And it very much looks like we are currently on the way to seeing more stablecoin deployments. In other words, the current positive rally is probably going to continue. I don't have a crystal ball. It's just the way how I interpret the data. And then the question is, does it make sense to just buy Bitcoin if we expect prices to go up, or should we rather go with the altcoins? Now, some altcoins can do phenomenally. Others tend to underperform. But let's have a look at, for example, Virtual. Virtual went up by almost 3x in the last month. But I think it's better to try to find those altcoins very early. So the real gains had been made in the early days, right? When we look at the all-time chart of Virtual Protocol, those gains are immense. 20,000%. And so the life-changing money is not necessarily just in riding the current wave and buying a broad basket of altcoins. It's trying to find approaches to get into those altcoins much earlier than most. And I think a very good approach is to look at people that tended to buy well-performing assets early in the past. So for example here, right, this is Brian Young. He bought the Virtual Protocol token at 7 cents. And that was on the 21st of March 2024. So that's over here. We subsequently saw a rally of more than 6,000%. And so here's his YouTube channel, right? He's got more than 2 million subscribers. It of course begs the question, is Brian Young just more skilled, or does he have sufficient impact on the prices? Because maybe some of his following is buying into the token as well. I don't know, but it's always valuable to know what those kind of people are doing. The way how we knew about Brian Young buying into the token at that time was not because he announced it that early on his channel. It was because we track his wallets. We've got 5 of Brian Young's wallets. In total, we track almost 600 influencer wallets. So we've got also wallets by Alex Becker. He's got 1.6 million subscribers. We are also tracking the Crypto Banter channel. They've got 1.2 million subscribers. And again, I think it makes sense to be very early with the insiders and with the people that move the market. Now, of course, not every single token that's purchased by an influencer is going to rally. Some tokens are just bought and never announced on the social media, so we don't have the purchases by the following. But if you want to have a chance of being early, if you want to get the 10 or 20x returns, we can't just buy what's already big, right? We have to buy the things that the smart money is buying as well. And so here are a few examples of trades that our community has made. We discuss the influencer trades. We discuss potential opportunities to bet on rising, but also to bet on falling prices, depending on market conditions. And so, of course, we track our influencer wallets, but there's also a tutorial section on just how to find those influencer wallets. There are various approaches through NFTs, through related transactions, through deposit addresses on centralized exchanges. There are 8 tutorial videos in total. And so then the community is trying to figure out what wallets that we are not yet tracking can we potentially add to our bot. So there's a dedicated wallet research chat. We've just added influencer Chicken Genius. And then every day we get signals when influencers buy and sell. Selling is also important, right? Most people don't publish when they sell. It's very interesting. Some people just buy, publish a video on an asset, and then sell just a few hours afterwards. They're literally pumping and dumping on the audience. It's quite nice to look behind the scenes. And so feel free to check it out. It's down below. It's thebitcoinstrader.com. Currently the price is $125 per month. It went down because search interest in crypto is now rather low. Once we are up again, the price of course will get increased, but not for the people that are already subscribed. So once you sign up for 125, that price is locked in. So here's my recommendation. Don't wait until attention is again at those heights. We are still early. The market is expanding though. Macro is positive, but you don't want to wait until the rally has already happened. Right now, attention is still low. The rally is likely going to continue. As said, there's still money on the sidelines. The stablecoin dominance has room to further fall, which will result in rising altcoin prices. It's just about figuring out what altcoin has most upside. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. The link is down below, thebitcoinstrader.com. There should also be a link directly here on the screen where you click on that link, then it will lead you directly to the page. See you next time. Bye-bye.